Hello, Justin here, and this video is about 5 must-read investment books. In no particular order, let's start off with Rich Dad Poor Dad by Robert Kiyosaki. This book is the only book on my list today that is not about investment strategy or how to invest. What it is about is why you should be investing and why you should be putting your money into investment opportunities. Most people rely on their salaries for their financial well-being, and this does not usually lead to great financial success because most of the wealth generation in our economy comes through the capital accumulation experience through businesses, assets, stocks, private equity, bonds, and real estate. And if you aren't putting your money into these investment opportunities, you are not able to take advantage of the wealth generation that most of our economy will go through. So this book, Rich Dad Poor Dad, really talks about that and really inspires you and motivates you to invest your money, which is why I'm going to start off the list with that book. The next book on my list is called The Dondo Investor by Manish Pabrai, and the subtitle of the book is called The Low Risk Value Method to High Returns. This book really challenges the conventional investment wisdom that high risk means high returns, when in reality that isn't true. High uncertainty does lead to high returns, but that does not really mean high risk, because a lot of the stocks that have a lot of upside have a lot of downsides already priced in. So when you buy the stock, it's already very cheap, and it can't go much cheaper than that because all the downsides are already priced in. So people consider these stocks very high risk, but they are not really high risk because since all the downsides are priced in, they can't go much lower than that. And if you win, you'll win big because the stock has a lot of potential to rise in price, but if you lose, you won't lose much. So it really challenges this conventional idea that high risk means high returns, when in reality high uncertainty leads to high returns, and often stocks with high uncertainty have a lot of margin of safety because all the downsides are priced in. So there is actually low risk instead of high risk. The next book on the list is called You Can Be a Stock Market Genius by Joel Greenblatt. There is a popular investment theory in the investment community called efficient market theory, which states that all stock prices reflect the inherent value of the company. And there is a lot of evidence that supports this, but I think there is a huge difference between all stock prices representing the inherent value of the company with most stock prices reflecting the inherent value of the company. Because as with any business theory or any social theory overall, there are always exceptions. Nothing is 100%. And there are definitely stocks that are exceptions that do not reflect the inherent value of the company. And the book, You Can Be a Stock Market Genius, teaches you where to find those stocks. And some hiding places it recommends are spin-offs, bankruptcy situations, restructurings, and mergers and acquisitions, because like I talked about before, there is high uncertainty in those situations and people are scared, so they price it lower than it's actually worth, and you can take a lot of advantage of that. The next book on the list is called The Little Book That Still Beats the Market, and it's also by Joel Greenblatt. This book was originally published as The Little Book That Beats the Market, but since it's an updated edition, we add the word still. So it's the little book that still beats the market. And this book is aimed at the lay reader, the lay investor, and the unsophisticated investor. And it really gives you the basics of value investing in very simple terms. It's very understandable and can be read in less than a day, and introduces all the foundations and concepts of basic value investing overall. So I would highly recommend it for the lay reader and the unsophisticated investor. And one concept that Joel Greenblatt really introduces is his magic formula, which talks about how to find cheap stocks that are also potentially high quality stocks. And he looks at stocks with low price to earnings ratios or low PE ratios, which would reflect stocks that are cheap. And he also looks at stocks that have high return on capital, which shows stocks that are high quality. So his magic formula is how he looks at PE ratios and return on capital to find cheap stocks that are also high quality. And the last book on the list is The Intelligent Investor by Benjamin Graham. This book is the granddaddy to value investing theory because it really introduced all the concepts that subsequent investors practice, talk about, and write about to this day. And two major concepts I found very useful from the book. One is Mr. Market, which is an allegory of the stock market. So Mr. Market, which represents the stock market, some days he prices stocks higher than they're worth, and some days he prices stocks lower than they're worth. You want to be buying the stocks when they're priced lower than they're worth, and you want to be selling the stocks when they're priced higher than they're worth. And that sounds very simple, but especially today, people are just looking at stocks like they're moving prices. They're not looking at the inherent value and the inherent worth of their stocks and the companies that the stocks represent. So Mr. Market really teaches you that you should be looking at the inherent value of the stocks you're buying rather than the moving prices, which are pretty unpredictable on the short term and fluctuates a lot, but they are predictable on the long term because eventually it does reflect the inherent value of the company. And the second concept that is a major concept from The Intelligent Investor is margin of safety, which I touched upon before, but basically you want to be buying stocks that can't go much lower. And when stocks are, and when a lot of downsides are already priced in to a stock, it can't go much lower, and there's only a lot of upside. And you want to be buying those stocks because there's a large margin of safety because they can't go much lower. And if you win big, and if you lose, you won't lose much. So those are my 5 must-read investment books. Thank you for watching. I hope you enjoyed the video. Like, comment, and subscribe, and hit the bell notifications. I like to post videos about great books that help people learn and improve themselves. If you want to read these books yourselves, the Amazon links are in the description. Also, follow me on Instagram if you want to DM me and for more personal content. And also follow me on Medium, where I post articles about book reviews and books in general. And they're more in-depth articles. So if you are more of a reader and if you like more details, then follow me on Medium because I share more details about the books I read. Thank you, and until next time.